This has been a long time coming. Everyone was under the impression that the Fed was joking and would not hike interest rates. Increasing interest rates would only lead to a recession at this moment in time. The pandemic continues to wreak havoc around the globe. Thousands of Chinese cities have been put on lockdown, resulting in a lack of goods in the market. Instead of putting a brake on economic cycle, the Fed was content to accept an inflation rate of 8%. The exact opposite, on the other hand, has occurred. A 0.5 interest rate increase was a surprise. It's the most significant increase in 22 years. The only possible explanation for this is that inflation was out of control at the time. Inflation is not something to be taken lightly. Observe countries where inflation was not taken seriously. Economies have been savage from the Weimar Republic in 1920s until Venezuela in 2013. But the one that happened in Hungary in 1946, shortly after the end of the Second World War, was by far deadliest. Inflation peaked at 13.6 quadrillion% at some point. Every 15.6 hours, the price of a product doubles in value. It's as every morning you wake up and your Starbucks coffee has more than doubled. Prices, wages, and taxes, how would you establish them? Many people stop believing in money because of the collapse of the economic system. As nobody knows what the currency will be worth in the future, they begin bartering and swapping commodities for goods. For how much money would you be willing to put selling candies to customers? Is there a way to save money? There are several answered questions. Your savings would be worth half as much the next day if you didn't use them. It's not like 8% inflation isn't enough to cause a major heartache. Even if it's only a little bit above 100%, just think of the chaos that could ensue 13.600 quadrillion%. In 1944, Hungary's biggest denomination currency was 1,000 pengas. However, during hyperinflation, it was 100 quintillion pengas. So, having a temporary recession is preferable to allowing inflation to spiral out of control. Why is it so crucial to raise interest rates? That is the foundation of current economic system. The Federal Reserve has complete control over the economy because it is the supplier of the currency. Banks and other financial organizations use dollars to make loans to firms and people, such as mortgages and student loans. Raising rates implies banks will have to raise their own rates, making loans more expensive and reducing the number of people who can access loans. If interest rates are 3% instead of 6%, you can get a significantly larger loan with a 50,000 salary. As a result, when interest rates are high, less money will enter the economy, resulting in a decrease in economic activity. The economy changes over time. Expansion begins, the economy grows until a high point is reached, and then it gradually cools down until it enters a period of recession and, in some situations, even a period of depression. At its lowest point, it begins to increase again, and the cycle repeats itself until it hits its highest point once more. If the overall cycle continues to rise, that is all that matters. The economy had already hit its peak 1 year before the epidemic. All that was left for it to wait for anything to bring into recession, which turned out to be pandemic. In reality, of course, it was the most sustained periodic of economic growth in the records of United States history. Despite the fact that the Fed pumped potentially trillions of dollars into the economy during last recession, it was not as severe as it could have been. The only drawback was that we recovered rapidly from the crisis and have again returned to the point of maximum inflation. Surely you haven't noticed how quickly assets prices such as equities, real estate, and even cryptocurrencies have increased in value. The past 2 years have been a dream come true for investors in crypto and digital companies. Since the beginning of the year, some stocks have doubled. And how can we tell when we arrive at the top? Inflation is out of control and expanding at an accelerating rate. It was for this reason that the Federal Reserve decided to hike interest rates. To put it in perspective, the Fed hiked rates to a high record of 2.4% in 2019, when the economy was at its height. As a result, the Federal Reserve will almost certainly maintain hiking interest rates over the next 2 years in order to keep the economy stable. The Fed's bold move was probably intended to send a message to the public that it prepared to take whatever steps are necessary to control inflation and isn't doing so for laughs as many people has assumed. The question that arises next is how this will influence the stock market, the value of the real estate, and cryptocurrency. The answer is obvious and easy to understand. Prices will decline as a result of a decrease in demand caused by an increase in interest rates. After falling over 9% as of this writing, Bitcoin is expected to plummet much more than by the time this video is released. The S&P 500 index has dropped by 4%, while the Dow Jones has dropped by 3.4%. Even they continue to decrease, less money will be invested in the risky assets like cryptocurrencies and tech stocks in the coming years. To put it another way, the equities that look like they were going to skyrocket and the firms that were predicted to bankrupt during the pandemic are now beginning their loss of momentum. This means that certain equities will decline, which is perfectly natural. Will this put end to the inflationary trend? The response to the question is yes, and the time is now. House prices are certain to be affected as a result of this for starters. For the sake of argument, let's assume that the rate of interest on mortgages goes up so high in cost that people may prefer renting rather than owning, resulting in a lower pricing for everyone. It's anyone's guess how far they'll go down. With so few homes available, no one is confident whether or not we will see a housing crisis at some point. However, not all inflation can be attributed to the acts of Federal Reserve. Since OPEC mostly determines the price of oil, a 0.5% rate rise will have no effect on the price of gasoline. OPEC is an association of countries exporting oil that controls the demand and supply of oil in the international market. They do this despite the fact that the conflict in Ukraine is driving up prices and causing a shortage in the market. As a result, gas prices are soaring, contributing to global inflation. It's the prospect of recession that bothers me most. The epidemic disrupted supply networks and ruined what corporations had been developing for years. As a result, these corporations will have limited options to rebuild what they could establish as a result of the increased rates. A tighter budget means enterprises will have to make cuts, which could lead to an increase in the number of people without work because the majority of business spend their money on paying their employees' salaries. This isn't expected to have instant impact because 0.75% is not 5.25%, which was the rate at which interest rates were set in 2007. Even if it's simple to point fingers at the Fed, dealing with a situation like this is far more difficult. On the other hand, we've just emerged from a pandemic that is far from being over. On the other hand, Russia and Ukraine are currently engaged in a full-scale conflict, which is bringing up the price of oil and pushing up the cost of everything else, including the cost of gas to drive your car and the expense of food. And that's the end of it. If you enjoy watching videos that are similar to this one, check out some of the other videos that I have uploaded to my channel. If you enjoyed this video, please give it a thumbs up, subscribe to the channel, and make sure the notification bell is turned on. Please feel free to ask any additional questions in the comment section. Keep an eye out for our upcoming video.